Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what happened today and what we can expect moving into next week. Excuse me, don't forget next week is a shorter week. Monday is of course an off day, the market is closed on Monday. So yeah, it'll just be a 4-day week next week. But with that being said and done, let's kind of figure out what we can expect moving into that. But yeah, with all that being said and done, ladies and gentlemen, if you enjoyed the video, don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, my membership section is live. The link is down below. If you're interested, you get access to all my intraday thoughts, posts, updates, etc. Options flow on Tesla every single day, sometimes other charts as well and stocks, but mainly Tesla, of course, every single day. So if you're interested, for just $3 a month, that link is in the description of the video down below. But let's just jump into it. Tesla with a pretty phenomenal day, actually moving up about 3.22%, closing at $179.34, which compared to the market, up about a percentile on the QQQ, for instance. Tesla with a pretty respectable outperformance. And I'm not gonna lie, a bit more green than I expected. I mentioned yesterday how I expected today to be at the very least sideways, if not slightly green. It definitely was more green than I expected. I didn't think it would be this green. What I personally expected to happen, for instance, was I thought we would come up to pretty much retest this breakdown of this bullish wedge that we had, which was somewhere around the 177.5-ish level, right? And I thought we'd reject there. I really did. We didn't. We actually went right back into it, and now we're kind of chilling back in the 179s region. So what does this all mean, and what, is Tesla back to being bullish? Is it still bearish? Like, what does this all mean moving forward? But let's talk about that. So I guess the most simplest way to look at it is going to be this. Like, I'm just going to really simplify it. Just so there's no questions asked. It's very simple, to the point, and yeah. So the way I look at it is this, right? Overall, Tesla, if Tesla really wants to resume the bullish trend, if Tesla really wants to be bullish, if Tesla really wants to go to 200, 205, even 220 potentially, there's something that has to happen, and something very simple, really, and important, right? And that's going to be a break of this green trend line. This green trend line, as you can see right here, that we've pretty much have been in all the way back since, what is this, December, pretty much late December of last year. This downtrend began, right? And then we got rejected at it off of this recent rally, post earnings, post that FSD China news, and then we got rejected by it really just like a few days ago, right? When we went straight up again into it. And we got rejected again. So the thing Tesla really wants to do is essentially break above this green line, this green downward trend line, and obviously close above it on the daily, right? Those are the most important things that you want to see. The question, of course, is, well, okay, well, what level is that, right? What level does it actually break above? Well, that level is going to be pretty simply, let's say it happens on Monday, pretty much 183, and it slowly declines throughout the week. So if it happens, let's say by next week, Friday, that'll be pretty much around 181. So really, if you want to make it super simple, about 183 to 185 break and close, in my opinion, Tesla has officially broken out of this downtrend. And really, there's not much more you can say that's actually bearish about the stock. Obviously, that's still not a massive, but a pretty big if, and if it'll actually happen or not. But that is the upside level to watch out for, the level to break, and the level to continue upwards again to that 200 to 205 level, 220 potentially even after that. So that's the way I look at it. Now, to the downside, what are the downside levels to break, and what follows up with that if we do break let's say X level? Well, first and foremost, if we break the low of today / yesterday, which is pretty much sitting around about 173, we'll say, to make it simple. If we break 173, about 173, that pretty much means that, well, most likely we're on our way down straight to this level down here at about 168. If we break 168, then we're on our way down to about this 160 level. Personally, I don't think we'll go much lower than 160, so 160 to 163. I've said many times as to why I think this level is important, why I think this level is still a possibility, and why I think it will personally hold. But to very quickly reiterate, it is that 618 Fibonacci retracement level. So for instance, if you go from this swing low to this swing high over here, you can see so far we've been holding the 0.5 level, which is good. But even if we do come down even further, this will be that 618 Fibonacci level at 161. That's reason number one. Reason number two is, well, it's going to be simply creating that potentially, right shoulder of that inverted bullish head and shoulders pattern. That's reason two. And reason three is, if you were to go back to, let's say, the 4-hour chart, and you were to essentially take this, duplicate it, and then put it down somewhere around here, right, we could still be setting up essentially what looks to be a massive bull flag, which will essentially have a fourth touch point down all the way somewhere around that low 160s, and then we bounce from that as well. So that's kind of the main thing I'm looking at in terms of the downside levels, right? Those are the each level that is the next level to watch the downside. And if, that level breaks, then we go to the next one. If that level breaks, we go to the next one. It's usually how it works, right? You come back to a support level. Is there enough support? Is there enough demand? No? Cool. Let's try the next one. Is there enough here? Yes? Cool. Let's find that demand. Let's find that support. Let's find that bounce. And then we move back up to the previous level. Now, is there enough supply in this level to outweigh the demand? Yes or no? If yes, then obviously we go back down. If no, then we continue to move up. It's just that kind of game, right? So that's the way you kind of want to, look at it, in my opinion. So that's kind of like the very simplistic, very simple, very straightforward kind of view that I have moving into next week, and honestly, even potentially June, really. So that's the way I look at it there. Now, overall, in terms of like structure, in terms of like, what do we really see in terms of structure, right? Well, let's take a look at it. Let's start with the weekly, actually, because we obviously did just close a weekly candle. So there is a good thing here on the weekly that, is actually bullish, all right? There's a couple of things. So first and foremost, stochastic on the weekly still looks good. Stochastic still looks solid, still looks like it wants to continue upwards. RSI still obviously looks neutral, I would say, maybe slightly bullish, but neutral. MACD still looks great, still made a higher high over here. It's still continuing that crossover, still looking pretty damn solid, with really no issues here, in my opinion, at least for the bulls, right? The bears are probably not happy to see this. The bulls finally happy to see such a thing, so that's good. The MACD looks bullish moving forward. Now, again, it is a weekly time frame, so don't forget, just because maybe we have a couple of down days, it doesn't mean that it's all over, right? Just keep that in mind, right? Weekly time frames obviously take a lot, they're a lot slower, but they require much larger moves to really disrupt any potential, in this case, bullish potential situation here that's setting up. Another thing that's bullish on the weekly is this, right? So last week, and the week before, we had two interesting candles, right? We had a massive red candle. Then we essentially had what looked to be, literally was an inside day candle or a bullish harami candle, which we talked about last Friday, right? How this candle, right, obviously was completely within this massive red candle, which again, inside week candle versus and a bullish harami candle. What does that really mean, though? That means that technically this is a reversal pattern. This is a bullish reversal pattern. And what does that also mean in terms of being triggered? Well, we technically did trigger it today. Why? Because today, or rather not today, this week, we did close the week higher. We closed the week higher than what this high, last week's close was. So last week's close, we closed at, what was it? 177.5 pretty much. This week, we obviously closed at, 179 and like 0.2, we'll say, right? Obviously, that's a higher price. So that's good. That means that the bullish, pressure, if you will, is still very much there, and in theory this should continue this pattern, right? Again, bullish harming pattern. If you forget what it looks like or whatever, let me go ahead and pull it up here. This is just roughly like a very typical depiction, like a textbook depiction, right? Here's like a more realistic depiction, right? You can see what it kind of looks like, right? You can see this next candle over here did follow through in terms of it closed higher, so then it continued upwards even higher, right? Closed higher, continues upwards, right? And we're pretty much on this candle right here. Obviously it doesn't have to be this perfect green candle. The idea is the fact that it just closes higher than the previous week's candle, so last week's candle. So today's week's candle closes higher than last week's candle, and it did. That's good. So there's still a lot of bullish things setting up for Tesla, which is why I said even yesterday, is Tesla bearish? It might be. But honestly, even if Tesla comes down all the way to 160s, there's still bullish theses, in my opinion, that can be made. I don't think Tesla's bearish unless it breaks 160. Like I said, between 160 to about 145-ish, it's neutral territory for me, because I don't think it's bearish or bullish. I just think it's neutral until a direction is picked, really. And below pretty much 144 to 140 is bearish, very bearish, actually. So yeah, that's the way I look at it right now. That's kind of the overall structure. Don't forget, we did have a break of structure on this massive rally up as we broke this high over here. That's a break of structure. That's a reversal potentially right there. And we came down, and we are so far in this general vicinity setting up what looks to be a higher low, right? So we're setting up a pretty decent situation, because don't forget that technically the low that we're comparing ourselves to in order to set a higher low is really the low down here, right? Because again, we said here, let's zoom out a bit over here, right? So you can see starting from here, we came down, we set this low, then we set a lower high, then we set a lower low, then we set a lower high, and then we set a lower low, then we set a higher high, and now we're setting a higher low. So we are potentially doing a reversal structure, right? A trend reversal. So as long as this keeps, that's great. Because again, even if we come down to that 160 level, like I talked about, which I still think is possible, I don't want to rule that out entirely. The only way I'll rule that out is if we break above this green trend line, unless it happens to be a false breakout. Obviously, anything can happen. But in terms of probability sakes, if we do break above this green trend line, like I talked about, again, the 183, 185, if you really want to be safe, in my opinion, it rules out 160. I think 160 won't happen. Personally, just my opinion, of course. But obviously, anything can happen, right? You never want to rule everything out entirely. It just really reduces the possibility of that, right? But as long as we're still below that, I still think 160 is a possibility. It's a very realistic possibility, again, until we either break above that, or especially if we start losing these levels I mentioned below us, then it becomes more and more and more of a realistic possibility. I will admit the move today did slightly reduce the chances, but it definitely did not remove those chances. For instance, let's all go to bearish pattern, right? On the 1 hour chart, what do we have, right? Well, on the 1 hour chart, we have a potential head and shoulders setting up here where we have this rally up to here. Then we had a rally obviously just a couple of days ago up to here, set up the head. And now we're setting up potentially the right shoulder of this bearish head and shoulders pattern, right? So if this pattern were to roughly play out, right, and if this pattern, were to essentially, do its thing, right, and it was to play out and break below the neckline, why the hell is this thing not drawing? Here, give me a second. Go like this, right? If this were to roughly play out, it'll look something like this, right? And then the neckline, you can argue, my goodness. The neckline, you can argue, is somewhere around this 173 level, which coincides pretty well with the level I mentioned earlier on one of those levels to watch out for to the downside, 173. So if you do break 173, this should, you can see if you measure the distance, pretty much take us directly to 160. I think that it'll be pretty much almost to perfection. So if we break 173, expect 160. It becomes much likelier. And then, of course, especially if we break 168, even more likely, right? But there is still this potential bearish head and shoulders pattern that is still looming over us. And the only way to really nullify this pattern, in my opinion, is at least to break above 180. But obviously 183 to 185 is even more ideal, which then not only nullifies this pattern, but even further gives further confidence to the bullish structure moving forward into June, which, like I said, can be up to about $200 per share, potentially even 220. So that's kind of the main way I'm looking at it, right? Now, whether or not this obviously holds or doesn't hold, whether it breaks up to the upside or this, bearish head and shoulders pattern does break down to the downside and continues downwards, and we do see 160, nobody knows, right? It's impossible to say for sure which pattern is actually going to be the one that does play out. But it is important to keep those levels in mind and react accordingly, and at least, assess your risk properly so that you're ready for both scenarios. If it does go up, you're ready, you're good to go. If it does go down, you're also ready mentally and potentially even with cash to buy that dip, right? So you always want to be ready in both aspects like that, right? You don't want to be just all in only to the upside, and if it goes to the downside, well, unlucky. Or the opposite, right? You're only sitting in cash, and if it goes to the upside, well, unlucky. You at least in my opinion, not financial advice, it's always good to have a mix of the two. So regardless of where it goes, which is what I'm doing, I re-entered shares. I instantly sold cover calls against them, but I entered half of what I would normally enter on my kind of regular position. I entered half just so that if we do have a rally upwards, I'll benefit off of that. And if we do break 183 to 185, I'll re-enter my full position because there's more confidence in the break now. On the flip side, if we do make our way back to the downside, I have the cover calls to protect those shares. And of course, I have a cash taker put to re-enter more shares back to my regular starter amount, if you will, back below. And that's going to be essentially what happens there. And of course, I'll have even more cash ready if we do truly come down to about the 160s, the mid to low 160s. Then I'll be obviously even more aggressive with that, and I'll probably double my position. But that's the way I'm looking at it right now. So yeah, that's my personal way, methodology. That's how I like to do it. That's just that's just me, right? Everyone has their own game plan. Doesn't mean mine's the best one or even the correct one. That's just how I play it, though. And yeah, I don't have to predict which way it goes, right? I'm pretty much ready for both ways. I don't need to predict. I don't need to be super accurate as to will it go up or will it go down. Doesn't matter. I'm ready for both sides, and that's the way I like to play it. So those are the levels, those are the targets that I'm looking at right now, and pretty much what I see moving forward. Now, in terms of options flow, there's actually kind of something interesting that happens. Let me go ahead and pull up Cheddar Flow. So in terms of black box, Tesla is not by far, but definitely the most bullish flow today, 17 million, which isn't really that much to be completely honest. But there was a lot of bullish flow came in, a lot of calls came in, a lot of pretty decent ones came in as well, right? It had a 1.4 million call come in, 160 strike for, well, that was a day trade. It looks like it was literally for today. So that was a day trade. But there was a few other ones that I mentioned that came in. There's some puts that came in actually too. So 1.5 million here, 1.16 million in puts that came in for next week, and this one, both of them for next week actually. So. But they entered when Tesla was at 176, so they're already down like about $3 per share just on those puts, and it's weekly puts, so they're probably down like a solid 10, maybe 15% already. So we'll see how that plays out. But one thing that's interesting that I wanted to mention is here you don't see it, but if you go to Cheddar Flow, you actually see, where is it? Oh, I have to go to Tesla, of course. You actually see something interesting. So this blue right here, which is usually extremely unusual, right? What you see here is this. You see a 185 strike above the ask call coming in for next week's expiration, so next Friday. 5.1 million call. Came in when Tesla was out 178.41. So really not pretty much where it's at right now, really, especially aftermarket, right? Aftermarket is down about 0.2%. Pretty much exactly where it is right now, roughly, right? So Whale clearly thinks that we're on our way upwards next week. I mean, again, pretty much buying a weekly 185 strike, which is out of the money. 5.1 million, substantial amount of money for such a short-term out of the money strike options play. So they clearly are thinking that we're moving upwards next week. Whether or not they're right or not, we'll see. But thought I'd mention that because interestingly enough, Black Box didn't show it, but Chatter Flow did. So very curious about that. But nonetheless, I do have a link to both of these apps down below for Options Flow if you're interested, with a discount for both if you want to try them out for yourself. But all that being said, video's getting long. I don't want to make it too much longer. That's the overall kind of picture that I see moving forward into next week and potentially even into June. So yeah, let me know what you think down below. Ladies and gentlemen, any pullbacks I personally view as opportunities as long as we don't go below 160 and above 183, 185. I believe the bull run begins to 205 to 200 to 205 and potentially even 220 to slash 230 after that. But yeah, thanks for watching. Let me know what you think down below. And as usual, I'll see you for the next one. Peace.